let's talk about Tesla. So
let's do it.
Yeah, so he's obviously extremely bullish, but everybody's not bullish on Tesla. A famed analyst is expecting a steep decline in Tesla stock. According to his estimate, Tesla stock could potentially go down to $50 per share. So
wow,
that's interesting.
Wow.
So let's have a whole full-fledged conversation about Tesla, shall we?
Yes. Marlon, I appreciate you. Tesla is one of my favorite companies, and one of the reasons I don't talk about it is like one of our all-star picks in Stock Club. But I do love it. The strength is it is a combination of tech and energy combined into one that uses the veneer of automotive to innovate. I do love the company. I talked about this in Toronto. The only major concern, if I'm looking at a SWOT analysis of Tesla, is the weaknesses are lack of Elon's focus. I think the acquisition of Twitter wasn't the best. It was bought it for $44 billion, but it's probably worth 24 to 14 billion. He has as many kids as Nick Cannon does, so his extracurricular activities are pretty damn high. But I need the company to focus more. Like if I look at the metrics of the business, the profit margin is 15%, gross margin is 25.6%, return on equity is 21%. For all the fanfare that they have and all the brand equity that they have, their margins are not big enough. Like if you look at Nvidia, which we'll talk about later, gross margins are 57%. And that new chip came out. It's about to put some pressure on the market. But I think in the EV space, they are hands down the leader. Daniel had asked me, is there anybody else that I would invest in the EV space? And hands down, I think the only player in EV is Tesla. So great company. Market cap, amazing revenue, 95 billion. The Cybertruck looks amazing. I like what they're doing there. They're finally going to roll that out. And they also have put in place a policy where you cannot immediately sell it within inside of a year. So there's some sustainability in that model. I like what they're doing. Like I have a 1 year target for them at like $410. I don't think it will go down to $50. Like that's too far. I can see it going down to 84. Worst case scenario, $79.23. But to go to 50, impossible. Like almost. If it does, I would easily park 6 figures there if it went down to 50. But it's less than a 1% chance it will ever go that low. But the company needs to focus. Needs better leadership. Needs to roll out products a lot faster. And they have to work on those profit margins. I kept saying last year and earlier this year, you cannot be a luxury company and then drop price to scale. Does not matter. WeWork tried to do the same thing and they collapsed. And with inflation going up, I think Toyota has a car that's coming out that's like 110 grand, an SUV that looks like the Rolls Royce.
Yeah.
Everyone is going to have to move into a higher price market and higher price services model to be able to sustain. Like if interest rates are going to continue to be this high, you can't sell based on price, because not only are you going to lose market share, it's the worst way to compete in business, but also too, you won't be able to have any money to redevelop or invest into the business to make the business and products better. So I hope they find their way. The stock has come down a lot over the last year and a half, but $50 is damn near impossible for them to go to.
Yeah, 50 is pretty drastic. But I mean, you made a lot of good points for a bear case, right? Like when we talk about interest rates being longer over a time period, that affects the car sales. But even interest, I looked it up, man. The consumer interest has declined for the past 6 straight quarters. They were once the #1 ranked shop luxury brand. They have fallen back, particularly the Model S has fallen back 10% in shopper consideration, which is something that you have to take into consideration when you're thinking about what product that you're putting out. They've also had production decline, right? We saw over the past quarter, and we talked about that pretty extensively about when you change pricing and try to get more vehicles bought. But they've spent a lot of time on this Cybertruck, and the Cybertruck isn't here. In fact, did you see, talking about you can't buy, they actually put a new rule in with the Cybertruck that there's a fine if you try to sell it a year after purchase. So that's unprecedented, right? Like after you buy it, if you try to sell it within 12 months, there is a $50,000 fine for selling it, which is interesting.
Crazy, but smart.
Pretty smart. But competition. I know they're by far the leader in the EV space, definitely here in America, but the base that they have to find and to have greater margin is China. And EVs are being built and companies that are being created and flourishing. You talk about having 4 models where a company like BYD has 30 models, right? And so if you're talking about lower prices and more models to choose from, there's competition in that space. Again, they are by far the leader in the space, but competition is there. And so there's a bear case to be spoken of. $50 is completely drastic, but
insane.
If we do see a pullback, because when I look at Tesla and I think about it, yes, it's more than the EV company, it's a tech company. Obviously, disguised as one, but we know how interest rates have affected tech companies.
Yeah,
and there is talks of recession in 2024. I was hearing some 100% chances over the weekend. These things have to be taken into consideration when we're talking about the future outlook. Tesla has always been something that's been volatile, over the pandemic for sure. And so to drop, initially when I saw the question, I thought a drop in $50. I'm like, that's not bad. We've seen it have those type of moves, but to go down to $50 a share, I think is a bit much.
Who would be the number one competitor right now? I don't see anybody being like, man, I want that Rivian bad as hell.
I was thinking Rivian. You're seeing them a lot more. They're starting to turn profit.
I don't see the demand.
We're seeing production more.
I think the number one competitor is not necessarily one company; it's every company. You see, Mercedes is going to come out with the electric G-Wagon. I feel like every company
Rolls-Royce has a Spectre now.
So I think the competition doesn't come from one particular company. I think it comes from every single company getting into the EV space. Where now Tesla is kind of like the go-to when you think. They be like Band-Aid. Like when you think of electric car, you think of a Tesla, but soon the dangerous part is when you think of electric car, you think of every single car.
Yeah. Right.
And eventually that's what is going to happen. Yeah. I don't know how long it'll take, but eventually every car will be an electric car at some point in time in the future. Right. So that I think long term is the biggest competitor to Tesla's dominance. When every single car is the same, now what advantage does Tesla have?
Yeah. What separates you?
I keep saying they needed Tim Cook. They have great leadership there, but they need a operator who is solely focused on the business. I brought this up in Toronto. Like, what do we know about Satya from Microsoft, other than he works with Microsoft?
Yeah. You spoke about focus, and over the past week, Starlink has been everywhere in the news. Do you think because of the attention that is going there? I mean, you're talking about 2 different companies that are world changing. When you speak about focus, are you talking about that? Like there is another thing that he's working on that
which would be a monster.
By itself. I think they said it could IPO by 2027 from all the reports I was reading. You're talking about multi-billion-dollar valuation.
Yeah.
Maybe that's where the focus should be, or is that where it's going?
I think Starlink on the publicly traded side will probably perform better than Tesla. It's something that's needed. They have a competitive advantage. I don't see anyone in the space coming close to, but he's going to have to hunker down and focus on something. I don't think he'll leave that CEO role of Tesla, but Starlink looks like the star for sure. Yeah. It looks like LeBron in 2003. It's like, this is coming. We got to figure out how to put DeJuan Wagner, whoever was playing for Cleveland, out the pasture. Darius Miles or somebody. Like, Starlink has to be the focus. I know he has a lot on his plate, but at some point you have to hunker down or find a way to blend those companies into one, for sure.
Because if I'm hearing what Shadi's saying, it's like, there's some truth to that, right? And we saw states making mandates. New York, we know 2035, California 2035, everybody has to have 0 emissions. And so if everybody's in a space, what separates me? Is it creating something different inside of Tesla, or is it creating an entire new branch of my business? And more, I mean, Starlink is that generational talent that can change things.
And the product has to get better for Tesla as well. Like the people that I know who bought in 2021, when they were sending me like, hey, I'm underwater in the car because they dropped the price. I'm like, it's not a good feeling. It's not a good feeling. But we've all, ran a business and at some point taken our eyes off of something. But I feel like this is going on for too long with him. I mean, the stock at one point was at almost $1,300 to now be in the $200 range. Insane.
Yeah, splits included. Everybody's been like, oh, wait, well, they split twice. Yes, of course they split twice, but they split twice.
Yeah.
We've seen, and we talked about Amazon before they split when Bezos was in charge. It never split, right? To a point where you saw 2 share splits in a matter of 3 years.
Yeah.
What's the business model for Tesla?
That they need to follow, or the one they're using now?
The one they're using now.
Well, they're selling batteries. The thing that I love on the car side, though, is like they sell direct to consumer. So they're way ahead of all of their peers. And I think there was a certain cachet that came with owning the Tesla, particularly like the Model S. But I do like the business model. The only thing I hate in their model is the margins. They have to find a way to get margins up. Like, you cannot have your operating margin be 11% and your profit margin be 15%. Yes, that's good for a car company, terrible for energy, and terrible for a tech company. Terrible. I know the costs are high for those of you in the comments. I know the hardware, I know fabrication, production, I get it. But they have to find a way to at least knock that margin up to like 21 to 23% to like keep their competitors at bay, which they've done a great job. Ford can't catch up. GM is floundering at best. Mercedes with EQS and the G-Wagon will have some impact. Rolls-Royce now has a Spectre, will have some impact. But you have to get those margins up, especially if we're going to go into recession.
Is one of those places inside of the charging stations. We saw the partnership with GM. We've seen it, right? So if we can't,
it's a good way.
If we're going to create competition and we know that everybody's coming to the space, well, let's control other factors or other areas of the space, i.e. charging stations, i.e. create batteries for these companies, and so that they'll always become a customer. They'll always be relying on some part of our business to make sure that we always have higher revenue. Which
is like the B2B version of Apple's App Store, which is brilliant. You just need more players in that space and more partnerships. Like, that's why, especially in a recession, we touched on this lightly before we started, it's much better to have collaborative partners than to go to war. War is really expensive. Unless you make the arms, you are in the wrong business. I know Hit 'em Up made a little bit of money. I don't know any rapper that's like thrived off of beefing and dissing. It costs too much money to do so. So I think it's brilliant that they have those partnerships in place for the charging stations. I think they should be more aggressive there. But I think that leadership team really needs to figure out a way how to bump up that margin by 7 to 8%. Because if I don't want to talk about it too much, but we were at dinner and Daniel was like, hey, did you know in Canada, the mortgages renew every 5 years? I'm like, what the hell you mean? He's like, yeah, like you don't have a 30-year 3% rate. Every 5 years, they adjust. For those of you who don't know, 41% of Royal Bank of Canada's mortgages are set to reset in August of 2024. Now's not the time to have thin margins. They could go through what we went through in a big short era of 2008. Now is not the time to have 9% or 12% margins in your business, because you may have to have 2 years where 2 years of revenue will have to last you 4.5 to make it out of the store. Hunker down. What do I know?
What's your long-term projection for Tesla?
450. I'm not leaving Tesla. And if Elon's there, we got a shot. We got to shoot a shot. He's a generational talent, and he's succeeded at every level.
So you're still bullish on Tesla?
Hell yeah. It hasn't left stock club. If it goes to 50, easy 100 grand. Boy, I'm going to be like I was in Girl Collection at one time. Go ahead. Shout to the ballerinas. Get all this real quick on Tesla. If it goes to 50, oh, baby. Please. Jamie Dimon, Michael Burry, short it down to 50 for me, please.
Yeah. If it goes to 50, what does the automotive market look like for the rest of companies? What does the economy look like?
Settle.
Right? Think about that.
Terrible. Yes.
It's judgment day, and the machines are here.
Absolutely.